Welcome to the Daily Market Recap. Today is Wednesday, June 3, 2026. Ouch! After an incredible record-breaking run, the bulls finally took a breather today as major indices tumbled from their all-time highs. The main culprit, a sudden and intense escalation of geopolitical tensions in the Middle East, combined with hot economic reports that are making investors sweat over a potentially hawkish Federal Reserve. It was a sea of red out there, especially for tech and software majors like Microsoft and Oracle, which dragged down the entire growth complex. Financials and big asset managers also took a heavy beating. On the bright side, energy stocks caught a massive bid as crude oil prices spiked, and AI infrastructure names managed to stay incredibly resilient despite the macro pressure. Even with today's messy sell-off, the collective market psychology isn't panicking just yet. CNN's Fear and Greed Index locked in a reading of 57 today that officially keeps us in neutral to greed territory, proving that investors are treating this drop as a temporary speed bump rather than a full-blown regime change. The absolute biggest driver of today's price action was a sharp escalation in the Middle East. The U.S. and Iran exchanged direct strikes, and critical target areas in the GCC states were hit. This has completely strained the current ceasefire, prolonged devastating naval blockades, and sent global oil prices into orbit, forcing Treasury yields higher across the board. Just when the market wanted a reason to believe in interest rate cuts, economic data threw a wrench in the plans. May's ADP private payrolls report beat expectations with 122,000 jobs added, and the ISM Services PMI accelerated fiercely with its price gauge hitting a near four-year high. This gives the Federal Reserve all the ammunition they need to keep interest rates higher for longer. Tech giants faced immense selling pressure all day, led by heavy losses in Oracle, Palantir, and Microsoft. But the real fireworks happened right after the closing bell. Semiconductor heavyweight Broadcom crashed 8% in extended trading after missing revenue targets and slashing its forward guidance, while cybersecurity leader CrowdStrike plunged 7% after its own post-close release. Amidst all the macro chaos, individual stock pickers had a wild playground today. Let's see who managed to print massive green candles against the grain and which companies absolutely felt the pain of today's deep market correction. Stealing the spotlight today was Marvell, skyrocketing 15% after NVIDIA's CEO suggested it could be the next trillion-dollar company. GameStop surged 12% after reporting solid earnings and dropping a surprise $2 billion share buyback program. Department store giant Macy's ticked higher on a guidance raise, and Acadia Healthcare locked in steady gains following a major analyst upgrade. On the dark side of the ledger, IBM led the Dow's painful retreat, sliding over 7%. Industrial giant Honeywell shed over 5%, and CRM giant Salesforce fell nearly 5% on heavy volume. Tech darling Oracle rounded out the worst performers, dropping over 5% as an aggressive software sector liquidating trend caught traders completely off guard. Looking at the S&P 500 through the SPY ETF, we took a clean 0.7% haircut to close around $755. Bulls need to aggressively defend the $750 psychological support level tomorrow to avoid a deeper pullback, while the recent peak at $760 stands as the ultimate overhead resistance ceiling. The tech-heavy NASDAQ tracker QQQ bore the brunt of the growth sell-off, finishing the day near $476. Technical traders should keep a close eye on the $470 area as critical horizontal support. On any relief bounce, look for sellers to cluster heavily near the $482 resistance zone. Small caps via the IWM ETF continue to lag the broader market significantly due to interest rate worries. IWM is hovering precariously above its $215 support floor. If the small caps can stage a rotation rally, they face immediate structural resistance at the $225 mark. While equity markets are just slightly off their all-time highs, the crypto market just went through an absolute meat grinder. Bitcoin completely decoupled from tech stocks today, crashing down to $65,385. This marks its lowest valuation since February and has caused widespread liquidations across alternative coins. What is driving this massive crypto drain? Institutional liquidity is being sucked directly out of digital assets and rotating heavily into Wall Street's massive $350 billion tech IPO pipeline, with SpaceX opening its investment roadshow and Anthropic confidentially filing at a mind-boggling $965 billion valuation. Whales are scrambling to raise cash, triggering Peter Schiff to warn of a crypto death spiral. Heading into tomorrow, the short-term sentiment is turning decisively cautious and defensive. Geopolitical risk is officially back in the driver's seat, and hot economic data has successfully forced macro traders to reprice a much more aggressive and hawkish Federal Reserve trajectory through the summer months. Set your alarms, because tomorrow is going to be packed. We have the weekly initial jobless claims data dropping, which will confirm if the labor market is truly too hot to handle. Plus, we will get the opening salvos of the SpaceX Capital Roadshow and see if the market can recover from Broadcom's ugly overnight earnings reaction. Trade safe out there.